Good morning, everyone. Welcome to Admiral Markets. Glad that you could join us here today on Wednesday, 12th of February, to be precise, as we are getting closer to spring. The days are getting a bit lighter, so that's always useful when getting up early for trading. We're going to take a look, of course, at our charts in just a second, though, but before we do that, as usual, the disclaimer explaining that the online educational materials and webinars are developed by Admiral Markets Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Then the risk disclaimer, of course, explaining that trading for exchange, just like global financial markets, is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. All right, so if you want to read the entire disclaimer, please contact one of the customer service agents at Admiral Markets and ask for that disclaimer. And if you proceed with this webinar, I assume that you have done so and know the entire or have read the entire disclaimer and understand that. So thanks for your attention. We're going to continue now, as always, with a quick explanation what we in general look for within this trading plan of ours here. It's a quick go-to trading plan, of course, but it does roughly indicate what things are important when looking at the markets, right? So in general, we want to define the trend and make sure we want to trade with the trend, against the trend, or even not if there's no trend, right? But we want to know which market environment we're looking for. Usually I'm looking for with a trend setups, for instance. Searching for an opportunity. That could be various things such as a pullback, support and resistance close by. Those could be typical opportunities. Checking for filters. There could be things that could be blocking the trade from materializing, such as a news event, public holiday, reward to risk ratios, technicals on the chart like divergence, for instance. Then if those things are good to go and the market is matching your trading plan, then you can look for a trigger. All right, the trigger could be a trend line, for instance, or a break of the trend line. And then the entry method could be, for instance, the pullback after the break of the trend line to a fib, for instance, right? So today we got a special view on supply and demand. Make sure, by the way, to take a look at Admiral Markets in social media. And with that said, let me head over to the Forex calendar. Yesterday we had Yellen, the new Fed chairman, speaking, which well, had a bit of a mixed results, I guess, on the currency pairs. The euro dollar went up and down. The pound dollar, I guess, did the same. The dollar yen did the same. It's a bit of a mixture there we saw with that particular event. But today we have Bank of England inflation report, and we have ECB President Draghi speaking. And of course, some scattered news events throughout the day. Alrighty. So, as I said, supply and demand, we've talked about it before. Let me open up the question and answer box here. Is there anyone in here that is visiting the supply and demand trading session here for the first time? That's important for me to know, because if everyone has been here before, then everyone knows what it is, roughly speaking, at least has seen it before. So then I wouldn't have to explain certain concepts. Okay, we have at least two that are visiting the first time. So for those of you who've been here before, I do apologize, but we'll just refresh certain things. Again, I'll try to make it a bit short for you, okay? But probably not a big deal. I guess everyone can use a refresher as well, so I don't think it's much of a problem. So with that said, what is supply and demand? Supply and demand is basically where there's a certain price level and price, or it's a range actually, but it's a type of range, type of zone that has specific conditions tied to it. Okay. Now, what are those conditions, and what kind of zone are we looking for, basically? What we're looking for is a zone where price is Apologies for that. Price is basically, I'm trying to open up my drawing tool. Good. Where price is basically in between two levels. Okay, so we have the top level and the bottom level, and price is boxing in. That's a range, a typical range, right? The supply-demand zone is a specific setup, though, where price has had an impulse prior to that and an impulse after that in the same direction. This would be a bullish supply, kind of like a bullish example of a supply-demand zone. The opposite would hold true if we had the same zone like this, and we had a bearish impulse prior to that and a bearish impulse after that. When we have that, when we have a range within an impulse and an impulse in the same direction, then that becomes a supply-demand zone. And when price goes back to that supply-demand zone becomes a potential resistance or support. In the case of this bearish example, if price then hooks back to that level, we expect resistance. And in the case of the bullish example, if price hooks back to that level, we expect support. Right? So that is all, basically. That's what it is. It's a specific sequence of events where we have impulse, correction, impulse, all lined up. So down, sideways down, or up, sideways up, and price hooks back to that level. An entry basically could be anywhere in that zone is valid. The stop loss would have to be on the opposite side. So in the upside, we have to have the stop loss below the zone, and in the downside above the zone. That's where the stop loss would be. The entry could be anywhere within these blue lines, basically. And the target would be the next resistance. So if we enter here at the blue circle, the target would be at the next resistance. If we enter at the blue circle on the bearish example, the next TP would be at the support. All right. There are some optimizations. When there's a strong impulse going out of the zone or prior to the zone, those are always better. The stronger the impulse, the better. And if there's at least a R2R, a reward to risk, of 3 to 1 from the blue circle to the TP, that's better, right? We want the more space, the better it is for that potential setup. Actually, to be honest, the supply and demand trading is mostly geared to justifying 3 to 1 or more. If it's less, supply and demand traders would consider it risky and might even filter out that potential setup. Alrighty, so let me look at the questions. Are there any questions so far? Is that clear, maybe? Let me check with that. And then we'll move on to looking at our currencies, of course. So specifically probably for the ones who are joining the first time, does that make sense? Or do you require maybe an extra explanation, which I gladly do? Good. So I got a couple of OKs, that's grand. Then we can move on, and we'll, of course, show live examples. So certain details and other things will be clear, become clear when we look at them, right? Goody good. So in the meantime, I'm just sending, if you don't mind, I forgot to tweet my wave analysis today, so I just do that quickly. That just takes now. I do that right now. Alrighty, that has been done. And we can take a look at the euro-dollar 4-hour chart. So we will keep the supply-demand in mind, but I will only, review it if I clearly see one, and then we'll discuss it. Otherwise, I will just look at technical analysis and price action signals. Okay. So the euro-dollar 4-hour chart, we're looking for basically a bounce or break in a way. We talked about the potential for the euro-dollar. Let's zoom into the 1-hour chart to be in a kind of a rising wedge, right? Also, we have divergence between these tops. We talked about yesterday. We talked about the fact that if price goes to the 136.40 level, that could be a bouncing spot off of this trend line. And it did bounce. It bounced a bit lower, though, at 136.29. So not too bad. 40, we did get roughly the bounce, and it went up about 40 pips to challenge these tops, but we got about a quadruple top and couldn't break it. And it was also the end of the day, and then the currency just reversed a bit and went to sleep, basically. So hopefully some of you caught a potential buy there on the euro dollar and made some nice pips. And that was a good intraday trade yesterday. Now today, we still have this rising wedge pattern we had it in play, but now because of this downside, it's not so present anymore. We kind of in the middle of nowhere. We're underneath the black band. We're not touching the green band as yet. So not a very grand place at the moment, I would say. This was the rising wedge pattern that I was talking about. And you see the fall, hook back in a way, and fall again. I don't have any clear trend lines on this particular euro dollar at the moment. The only thing I would like to look at is the moving averages here. You see the black band here. It's pointed down. So if price were to break above it, though, then price is above the moving averages, and the black band is above the green band. So everything is, in that case, kind of lined up, as you can see what I mean. So that would be an interesting potential. Otherwise, I don't really see anything to the downside as yet, because we could also be bouncing off this broken trend line. That could be another support reason. So downside not yet. It would be, in my opinion, too early for that. As you can see, the moving averages are still at least bullishly set up. So for downside, I would like to see an impulse down and a bear flag before taking it to lower levels. The upside could be interesting if we break above the black band, make a small 5-minute bull flag, and then continue. That would be the 1 hour perspective. The 4 hour perspective, you can see it's quite a mess in the sense that price is just oscillating and is ranging. There could be still that bounce like this, but price could easily retrace lower before making that bounce like this. So we're in the middle of nowhere, to put it sweet and simple and short. We're not close to support. We're not close to resistance. We're a bit closer to resistance probably. So this could go, in fact, there's a lot of possibilities, and the only way to know which one is going to happen is to wait. I see no other way but to wait and let price action decide what is most likely at this moment. As soon as we get some 1 hour direction, like a good 1 hour, a couple of good 1 hour bars that show directional guidance, that would help us with deciding which way the euro dollar could move today. Otherwise, I really don't have any preference. Obviously, if we look at the daily chart, we do have a bounce here, so it would suggest a potential bounce of the daily chart. But if you look at the black band, it's used as resistance. And what did we have yesterday? We actually had a bearish pin bar. So in that regard, maybe not too good for bulls at the moment. Of course, there could still be upside to challenge yesterday's high at 136.80, but this is a pretty bearish candle, and you can see we didn't have sufficient power to break above the band, the daily black band, just like we didn't manage to do it here, and we didn't manage to do it here. So maybe this is again failure. Price action not too bullish yesterday, very bearish. The daily chart itself, though, has a bullish trend line here, and price is about halfway the range, as you can see. Technically, though, we are making lower lows and lower highs, potentially here as well. So there are a lot of mixed signals, I would say, and therefore, no preference at the moment in my opinion. All right, let me see. Check just the daily chart. I don't see any supply and demand zones at the moment on this on any chart of this euro dollar. Basically, why is that? Why are there no supply and demand zones at the moment? Basically, what we're looking for is always a trending mode most of the time, because that's when you get them. Trending mode, you get impulses, sideways, and continuations. If you have a lot of retracements, then basically price doesn't make them, right? When we have an impulse correction an impulse. I should do it the other way around, sorry. Correction, sideways zone, correction. Mind you that as soon as price goes back to it and uses that level, then that supply and demand zone has been used and is not valid anymore. Okay. Also mind you that if price is making a range like that after down, sideways, down, but then price starts to like make a lot of retracements, none of the previous supply and demand zones are valid anymore because price has broken those levels, is in between those levels. All of that is not valid anymore. Okay, so let me see if I can see one example though. The tighter the range, the better the supply and demand zone is as well. Maybe the 4-hour, let me check the 4-hour. You see, we don't have that much here. We only have tops and bottoms, in fact. So not too present on the euro dollar of late. This could be one right here. It took a while, but right, we had an impulse, sideways box, and an impulse, but unfortunately, price never went back to it before it continued. Right, so that is one example, but not a full example. Let's continue maybe with other currency pairs. Maybe we can find them there easier. Let's go with the pound dollar. In the meantime, JS, the black band is the 34 EMA close, high, low. Alrighty, so pound dollar. Anything going on here that we, that we should know of? Let's see. Basically, yesterday we had a continuation after our session. During our session, we saw a bounce off support here, and we saw some upside, then a retrace, and after our session, we saw the break, pull back, and continue. That was yesterday's intraday movement, basically. At the moment, we have a pretty sturdy engulfing twin. Don't forget that the Bank of England inflation report is coming up, so we have to be careful with that in mind. We should be very careful, in fact. There could be a lack of movement until then, let me say it this way, a substantial slowdown prior to that. So also something that could heavily influence price when the news event, of course, is released. Definitely on the hourly perspective, it is in an uptrend. Prices or the moving averages are lined up to the upside, and we have the support level here, the orange trend line here, and let's see what else do we have potentially. Maybe even this bouncing spot right in here, maybe this channel at the moment. We'll have to see if price respects this channel or not. Also, we broke out of this downtrend channel, right? And we talked about the fact that if price were to break the 50 fib, that we have a potential to the 61.8. I told you that at the beginning that I liked or that there was a potential space for that trade, although I didn't like it because the price could be choppy. It could move choppily up in that zone, and it's partly true. It did move up, although we had a bit of a retrace in between. We had an upside, hook back, and go up to the 61.8. But basically, it was true that there was that space between the 50 and the 61.8 fib. So if you have any doubts, this is a prime example how indeed the market uses these fibs and these ratios to understand where the spaces are in the market, right? It's clear that support kicked in here because there was still space up to the 61.8. It was actually a perfect setup because not only was the 61.8 fib not taken out because the price missed it here, we hooked back to the broken 50 fib, used the broken resistance as support, used the 50 fib as support, and then moved it up to the 61.8 for a great, let's see, 44 pips. So this is a prime example how you can use fibs and moving averages and support and resistance concepts to space out, and understand where the the best intraday trade of the day is. Anyhow, we're still in that particular environment that we've hit the 61.8. So the question is this basically the resistance spot? Because there's a bottom here that could be a resistance as well. This could be, for instance, if we look at it this way, we could have downside, up, down, up, back to resistance, and then down, for instance. Or if we break above the 61.8, then we know there's a good chance for the price to go to 780.6, and maybe later on even to the 886, and even, more breakouts. That would be the space to the upside. So that's a clear level. Basically 164.90 / 165 for 50 pips up to 786. Okay, that is the upside scenario, which could happen because we are in this trend that broke out of this this downtrend channel as well, right in here yesterday. So the trend could be strong enough to keep pushing through these resistance levels. The opposite scenario would be that the resistance levels are too strong. In this case, the 61.8 plus the bottom on the left that becomes resistance is too powerful and will stop price and will let price reverse or make a bigger retracement. We've already made some retracement, but price could make a bigger retracement or reverse, right? In that case, price would have to break through the supports on these lower time frames, such as the moving averages, such as this trend channel and trend line, the orange one, right? So that, what we could see potentially here is a fall, for instance, from below last hour's low down to the orange line, roughly speaking. There's maybe another support level right in here that we should be aware of. So there could be a small fall here. That's always the difficulty when you have a bit of a reversal trade, is that there's less space, as you can see. Only when we break below basically the orange line do we get more space and breathing room to see a bigger fall on this pound dollar. All right, so I would say those are the main things to look for at the moment. Bearish price action at the moment with the engulfing twins last hour, but that could be just a move back to support, and we could bounce there again. Let's take a look at the 15. Yeah, nothing new there basically at the moment. So the 5 is a bit of a mess. As you can see, a massive downside. That was a big fall about an hour ago at the European Open. 50 pip fall that early is quite unusual. Doesn't happen too often. So these are the lower time frames we've looked at. Let's take a look at the daily chart to get an idea what happened with yesterday's candle. We have a low around 163.92 and a high around 164.87. So those are key levels, of course, as always. But it was a bullish candle, though. Just like the euro dollar, the pound dollar cable here is basically fighting against this black band on the daily chart. Now, just in case you're wondering, this downside here and this range here, basically this range is not a supply and demand zone because the price broke to the opposite side. We're always looking for two impulses in the same direction. So we had a bearish impulse, range, and a bullish impulse. That would not be a supply and demand zone. What we're looking for is again a bearish impulse, then a hook back to the same zone, which would then probably be resistance. For instance, here we have one. Right? This is a range after an impulse, and then we have an impulse after that, and the impulse hooks back to the supply and demand zone and then bounces. The moving average, by the way, are pretty intertwined at the moment on the 4-hour, so that's pretty messy. But let's see, if price can use these tops as a support level, then there is that potential for price to move up. If this level gets broken here, as I said, there's a potential to fall to yesterday's low, and if yesterday's low is broken, then we could probably see a bit more downside today, and most likely more downside tomorrow. Now, today's downside, even if yesterday's low is broken, will probably be limited because of the average true range that a typical currency would see any average day. But that would indicate that probably after maybe some small retracement tomorrow, that tomorrow would see another bearish day, basically. Or in other words, we could see a break, pull back, and continue if the orange line breaks. So that's, I would say, the scenarios for today. How about the upside? It depends. The upside break, if the 164.90, 165 gets broken, personally, I think it would be the best to look for something like yesterday. Basically, yesterday had a break, pull back, and continue. Or the other scenario would have been a break, triangle, and continue, right? Both of them were good trades. Something like that today would make sense if we break this, if we break these resistances here at around 165, right? Basically the 61.8 level that we already talked about at 164.80. So once we break that level, like we did the 50 fib here, waiting for either a pullback or a bull flag and break would be probably the preferred entry method for catching this pound dollar upside up to the 78.6 fib at around 165.50. Right, so that's one way of doing it, like this drawing on the chart. That would be the upside scenario. The upside scenario is has a bit of advantage that it's with the trend at the moment. The downside, at least above orange, would definitely be still counter trend. Below orange, one could consider it already a with the trend setup, in fact. So let's see how this price action goes and which side basically we get a confirmation. That's the advantage. Of course, one could jump in right now and hope for the best and assume that it goes well, but there's a lot of time still to the end of the day, and there's no harm in waiting for confirmations of certain price movements to judge whether one or the other direction has a higher probability to develop. All right, so that's the pound dollar. I suggest we take a look at the dollar yen, but I see a question, so give me a second. Richard is saying that I hear when someone talks about supply and demand, they said drop base rally. Would you explain what this is meant when they said that? I'm thinking for a second. Drop base rally. Well, I guess I'm not too sure. I'm not 100% sure, but I would assume or guess that if you have a supply demand zone, you have an impulse, you have a range, and then you have, and again, an impulse in the same direction. So if you drop, then this would become the base for a rally. Maybe that's why, drop base rally. So if the red suggests the drop, the blue is the base, right? The supply and demand zone is the base, and then the green is the rally after that. I don't know, just a guess. Richard's saying go down. Yeah, if it's a downward example, if you mean that, then it would be a rise base drop. In fact, it would have to be the other way around. So, not too sure. Supply and demand zone is really basically one of those tools I just use when I see it, and it's not something I really hunt for or something like that. It's just that if I bump into it, that's fine. It's not, a standalone strategy for me, although there are traders that do use it as a standalone strategy, but not for me. I just use it as an extra confluence, basically, when I see it. Dollar yen. Dollar yen, a bit of a wacky break yesterday, pullback, and then still continue. Funny, isn't able to break this resistance. I do think, though, that a break above this resistance seems to be like an interesting breakout trade. Has interesting potential. Why? Well, we are in an uptrend, so that's first thing. There's this uptrend channel, even potential for a steeper uptrend like this. So there is that potential to break to the upside. If we do break to the upside, what will be the next resistance? It could be this top. So there is some space to that level, and then to the next resistance trend line, and then to basically to the next trend line here at the red one there. That would be the space to the upside. And we are making higher highs and higher lows. We did have a triple bottom at the 50 fib of the daily 50 fib. What fib is that? Let's take a look at the daily chart. If we take the very bottom to very top of the weekly breakout consolidation that we have here on this chart right now there, that I'm putting on the chart, then you can see we had a break pullback, and this could be a continue potentially, right? We talked about it yesterday. So I don't want to elaborate too long on that. So we had triple bottom at the 50 fib, and now we're making higher highs and higher lows. So if we break above, the orange line, above the resistance, there is the potential for price to continue with the trend. That would be the upside scenario here on the dollar yen, in my opinion. We'll talk about downside in just a second. So upside, you can see if we put a fib from the triple bottom at the 50 fib and put a fib from that triple bottom up to this top, we stopped at the 38.2 fib, and the target of that, the first target is the minus 272 at 103.14. So that would be the breakout scenario right there. Let's take a look at that at the 50-minute chart. And the price is a bit choppy at the moment. That's good. That's called a consolidation. That's a corrective pattern. So the entry above these tops, in my opinion, at 102.72, well, with the stop loss just below there, I guess, at about 102.40. All right. Now the first target doesn't necessarily have to, the TP doesn't have to aim necessarily for minus 272. One could aim for higher fibs as well, but there could be a small pause at the 272, like a bull flag, and then it could continue. So that's the upside scenario. The downside would mean that the trend did not continue, probably, or there's some break of this trend line, for instance. Let's take a look at the 1-hour chart. When price basically breaks this support line, that could be a small counter trend trade, but we're still in the uptrend channel. Mind you that this particular line, the black trend channel, is still valid, so the fall could see potential move down to this level. There's also a support level right in here. However, if we break that support, then there would be a break potential to the downside. So that would be the downside scenario. We would have to break these support lines, and at first, of course, it would be more of a reversal environment, and then we would keep breaking. Then it would be more and more of the trend scenario. Let's take a look at 4-hour and daily still. Yesterday was a bullish candle. Nothing else to say, I guess. We have a clear daily resistance, though, at 103.40. That's something we should be aware of. Let's take a look at the odd New Zealand. Bob is asking about the odd New Zealand. Let's take a look. And I don't have a 2-hour here, but I can take a look at the 1-hour for you, Bob. And we are breaking through the support line. We didn't get any break, indeed, through these sustainable breaks through these orange lines. I mean, we had a bit here, but we didn't get a break through the third orange line. Or let me make it a bit different color so that it's clear which color or which trend line I'm talking about, this green one. We got a break of the green one, then a hook back, but the continue was so weak, and it was just didn't go anywhere, unfortunately. We got to move back to support, but even that hook back, no follow through. That can happen. And now we're breaking the opposite side. So that would be a break of this magenta line and a break of this bottom. That could be an interesting reversal trade indeed, with an entry here, stop loss above the tops here, and aiming, for instance, for, let me put a fib on this downside here, the 50 fib, for instance, right, at 107.60. Although we have a bottom at 107.80. That's always still a potential support level. So those are the levels that we can expect some support. Otherwise, indeed, with the trend setup here, because we were in an uptrend channel indicated by the magentas, we did bounce off it again and again and again here a bit, but now not getting follow through, and therefore the potential to fall here. The AO 4-hour chart is pretty strong. So if price does not break the magentas, there's still if we break these 4-hour tops, there's still that potential to go up to the upside as well. That would be the other side of the coin, right? The upside scenario. Equally valid, because a break to the upside would be, as I said, within this uptrend channel, within these magenta lines, would be with the trend in fact, and that potential would definitely be there if we break above these tops. The tops are around 108.70, and then there's the potential to move up to the target at 110.48. Price action was pretty bullish on the odd New Zealand, with a pin bar here and a bullish candle. So this downside, we have to be careful of these support levels, because those could still be supports as well. Yesterday's low, for instance, 108.08. All right, so that price could easily bounce off of that 108.08 if it does fall here. It looks like it's falling, and then we'll have to see if it makes a bear flag. It could fall to test this support. Now 108.08 is a bit close. That's only 24 pips away, so that's like a 1-to-1 R2R. Not that great, but as I said, the price could break through that. It might make sense to use a trail stop for this and hope that 108.08 gets broken, or price just stops slightly at it and then continues down. Alrighty, how about the Aussie? I'm fumbling with my words today. Aussie, AUD USD. If the AUD New Zealand is going down, then maybe New Zealand is going up, but the Aussie isn't apparently. The Aussie hit during the night 90.67. That is already a pretty high level, so not surprising that we're finding some resistance here. Let's see, we had a bit of a divergence between these tops, and that led to this retracement back to the green band and then a bounce off the green band for more upside. So that was good upside trading there. At the moment, there is divergence between these tops. We're approaching a monthly high. Last month's January candle high was at 90.90 approximately, so we're very close to that. That is also a weekly resistance level. Let me show you. Here, right here. It's difficult to see. Okay, I'll take that fib off 1 second, folks. Alrighty. Daily, weekly chart, sorry. So let me start with the monthly, right? We were saying that last month's high, as you can see, right around the corner, to be exact, last month's high is 90.85.7, 90.86. That last month's high is also a weekly top resistance. Price usually respects those levels, plus the weekly daily fib at 38.2 fib is at the same level. So no wonder prices, could struggle here. I wouldn't be surprised, and I would definitely recommend counting on difficulties here for the AUD USD to the upside. All right, so yesterday was a bullish candle. We did break yesterday's high. The question is, will we get any follow through as yet? And if you look at the 4-hour chart, there is some bad divergence there present between the tops. And 1 hour, there is potential divergence as well. Let me check. Yes, there is between the tops, right? If we connect the tops like this and connect the tops of the oscillator, we see there's divergence between those tops. So price is making a potential rising wedge chart pattern as well. So the bearish scenario would have to see a break of these green trend lines, in fact, to the downside. That would be a reversal trade back to the green band, for instance, right there. Once we break the green band and this support level, then we could see a bigger with the trend fall on the Aussie. That would be the downside scenario. The 38.2 fib, if price does push up to it, would be resistance level 2. That would be another bearish scenario, because a turn at that level is definitely a potential, definitely a possibility. And in fact, catching a turn at that 38.2, maybe with a stop loss above 91, it is a risky trade because obviously price could push through that level. But then again, there's such a resistance there that it could be a tremendous reward to risk trade. The risk could be only 25, 30 pips, and the potential reward, if this indeed reverses for a pretty serious fall, could be tens, maybe 100 or more, or even 200 or more, right? Depending on how far you want to target and how long you want to hold that trade. So that's a pretty massive potential there. And if you target a very big R2R, even if that trade only works out once in 5 times, you would be, well, still very nicely compensated if your R2R is 10 to 1, for instance. So those are the ideas here on the downside of the Aussie. Upside, if anyone is bullish, then I wouldn't recommend it at the moment, personally. I don't see any reason to be bullish at the moment on the Aussie. It's too close to the target. There's only 20-some pips difference. At the moment, price is at 90.58. The target is at 90.80. That's 22 pips difference. Furthermore, we have divergence on all time frames, and one would be selling right at the top of a rising wedge, right in front of a resistance line, and in front of a monthly high, weekly resistance, and daily 38.2 fib. So I wouldn't recommend it. Price could make those few pips up, but I think that this is definitely a space, a very small space that could easily be skipped, no matter what type of trader you are or someone is, basically, in this case. So I think this one is pretty straightforward. Now, of course, the scenario breaks. It's different if the 38.2 breaks. If we, for instance, get a massive bull flag like this at the 38.2, and then we start to break that bull flag to the upside, well, then things have changed. The consolidation shows that the downside is not strong. Then there will be no reversal probably, that this bull flag is a potential chart pattern continuation for more upside within this uptrend. The rising wedge wouldn't be valid anymore. The 38.2 fib would have been respected, but price decided not to reverse from there, indicated by the bull flag pattern. And if price then breaks through the bull flag pattern, there's a high likelihood of continuation up to next resistances. That's when it will change, in my opinion. Or in the other scenario, if price were indeed to speed up, break through the rising wedge, break through the 38.2 by more than 15 pips, let's say if it breaks above 91, well, then the entire bearish resistance was, thrown away, overboard, and wasn't in play, totally not important apparently. Not that we should plan on that, but if it does happen, and we do get a bull flag after that, or a triangle, right, then upside continuation would also make sense. Dollar Swissy was very wacky yesterday, falling out of this or bouncing off of the support and breaking out of this downtrend line here, then hooking back to support all the way to the bottom again, and then bouncing again. So pretty funny because we had two bounces here. All right, so basically pretty wacky price action. Dollars will see a bit funky at the moment. Let's see, I got a question from Sock. If a trader sees all the fundamentals are pro-Aussie up, well, it depends. I mean, if you're a fundamental trader, then you'll have to indeed take that into, or depending on your own, own triggers, it depends on what type of trading you do. I mean, if you use fundamentals and only use fundamentals, then by all means, there's no reason to change that, of course, just because I'm looking at the charts. If you use a mixture, it will depend on how you mix that. I'm only using technical, so if the fundamentals, if you think, or if some people think the fundamentals are up, that wouldn't influence my technical analysis on the charts. That those two things are not influencing my decisions. But I'm not saying that it's wrong or bad, but in my case, I don't do it. I know that other traders do, and that's fine, no problem. If the fundamentals are up, indeed, then basically, then the scenarios that I mentioned will happen, I guess, eventually, right? I said that the bullish scenario or situation would be interesting for me if I see a bull flag, preferably after hitting the 38.2 fib, right? Then I would gladly take it to the upside. Or if price indeed is so bullish that we break through the 38.2 and the 91 level, and then starts to make some consolidation and then breaks. So I'm open to bullishness, but I need some more at this point of view, at this point of time, because of the signals that I see. I need more confirmation, basically. See dollar Swissy. I don't like the dollar Swissy at the moment, to be honest. It broke out of this triangle, but now it's back in the triangle. Kind of wacky. Moving averages are pointed down. Not so clear at the moment. It's maybe bouncing off this trend line, but right here, the second one, let me make that a different color. Magenta here. But all in all, as you can see, the reason why this is, I mean, it's, oof. Swiss franc is really not in a trend against the dollar. Well, it was maybe in a downtrend here, by the way, but yeah, the daily chart is probably in the downtrend. We can see that the long-term moving average are acting as resistance, but there's a lot of choppiness below it, right? A lot of choppiness below that red band there, or sorry, brown band, in fact. So from that perspective, are we going to break above the brown band here, or the black one, usually in other charts, or are we going to see break to the downside again? We'll have to probably, the answer to that question, we'll have to wait for a break of either the orange line here on the chart or the magenta to know which one of those two is most likely to happen, in fact. At the moment, I wouldn't touch it, at least until we get a clear break of that. We did have a daily pin bar, bullish pin bar yesterday, so not too interesting at the moment. Dollar CAD, let's take a look. Couldn't break above the resistance that I talked about yesterday, and use that resistance for downside. So what are the scenarios here? The upside is pretty clear. Upside is above orange and above red. Very clear upside up to the top, and above top, then up to the target. All right, that's very straightforward. We are in an uptrend, so if price does break above the resistance, there's a good chance of continuing. How about downside? Downside is a bit less clear at the moment, because first of all, we are close to support, which could be a bouncing spot. So for upside, we would need probably a little bit of retracement, and then we'll have to see maybe at these bottoms, price could stop and use it as resistance. That's possible. So the downside would at least, the downside scenario would have to see at least price move up to resistance. We would have to see some respect for the resistance, and then we could see maybe some downside. Or if price does break below the green band, we could see a fall to the 50 fib, and then down to the 61.8 potentially if we break then through the 50, and then below 61.8, we can see further downside potential. Of course, all of these fibs could still be bouncing spots as well. So this fib, from top to bottom, very important to understand where the spaces and bounce potentials are. All right, so let's see what this CAD does. That would be the spaces here and the confirmations, the trend lines, and the key levels that I'm looking for. Björn is asking, by the way, if someone trades fundamentals, does it make sense to trade longer time frames and lower lots, big stop loss to filter out normal bad news? Yes, I think so. As far as I know, that's what fundamental traders mostly do, but I know also news event traders that you can consider are fundamental traders, but they're actually fundamental traders trading specific separate news events and trading very short-term time frames, right? Scalping in a way, the news event. Besides those, indeed, most of them do that. I think I don't do that myself, as I said. But other method, of course, is a mix. So you have traders who use fundamentals for the very long-term direction, and then zoom into, for example, a 4-hour chart to use technical analysis for timing purposes of their fundamental view. That's another way of doing that. Or the daily, for instance. They could use monthly, weekly charts for the fundamental picture, or not even use charts, but use the daily for timing, for instance. Indeed. Let's take a look at the yen crosses, pound yen, euro yen. Both of them are looking pretty much the same. Both are kind of like inching forward in a way, upwards. The 4-hour chart looks a bit steeper, looks more like a rebound up after a pretty sizable downside correction / reversal. Now we're at the green band. It's difficult to say. We could easily continue. I would say here too, the upside potential would be with this channel. The downside potential would be if we break this channel basically and then start to break the black band as well, and then we could see a follow-through of this downside, right? So here too, in that regard, equally potential for up or downside. From a daily perspective, though, we can see clearly we went back to support, right? So the question is, even though the daily chart could be back into an upside, we could see a retest of this bottom before moving up. And also we have these resistances here that could act as resistance even if price stays within this blue channel. If we hit the resistance, that could be another reason for some downside, either for more upside or indeed for more downside. So key level, this daily top, 171.50-ish, and this channel. So 1-hour charts, we are pushing a bit through that channel as we speak, in fact, but the price is still above the black channel here, the black band. So as long as we do that, then I think it's a bit early to look for downside trades. There could be some downside here between the black band and green band, and then below the green band again for that downside continuation. Same scenario probably would hold true for the euro yen. Exact same story. It has the resistance at 141.20. It could continue up in the channel to that level. If it does reverse, then I would say we need a break of this green band as well. Same scenario. Odd yen is pushing up. Let's take a look at pound odd. Pound odd is using the hourly black band as resistance at the moment, with the bearish 4-hour price action signals. At the moment, though, I don't see anything. We're right at the bottom, and that's not not an interesting spot. When price is at a resistance to support, unless you're a reversal trader and anticipating maybe a bounce here, of which we don't have any confirmation because price action is not confirming anything of the sort, because we had 4-hour bearish price action. Daily, we have a bearish daily candle. Hourly, we just have a very small wick here, so there's no price action confirming any bounce to the upside. If we do have a bullish price action at the support level, that could be a potential reversal trade at this support level right here. If we break through it, then maybe make a range, then there could be reason for bears to look for more downside. Euro odd is also the same scenario. Definitely a downtrend to Euro odd, but yeah, struggling right at this this support level. Already. Let's see, what else can we look at? Gold continues its upside march. Let's see what happened yesterday. I'm not sure. Apparently, I don't remember, but apparently we were talking about this fib because it's on the chart. I'm not sure what I said, but I forgot. But in any case, price moved back to the fib and bounced to the 272 target. Hopefully, I said something like that. That would be nice. And there was indeed some small space up to that target, which price did move up to. So that's good. Price is still in that uptrend, so the next target could be this minus 618 and maybe even the minus 1000. Price would, however, have to break above resistance, this trend line for instance, and that could signal the breakout potential here on XAU USD. Dollar index still hanging about at the bottom of this uptrend line. No change there. And odd CAD and pound CAD are both retracing at the moment pretty sturdily, in fact. All right, so Euro New Zealand, pound New Zealand are quite choppy still. Not that interesting for me at the moment. How about Euro pound? We didn't look at that. Also quite choppy at the moment. So what's the Euro doing? Last hour was bearish. This hour, just a small candle so far. Pound dollar with the inflation report coming soon, making a bit of a bounce here. Nothing special so far. Ah, yeah, that's true, Bjorn. Yeah, Bjorn was talking about a scalp sell. That's funny. You can see how the market could give trades to both sides in a way. It gave a trade to Bjorn for a sell scalp, and Bjorn was right on the fact that he should take his profits soon, because indeed the bounce came, which gave the upside trade that I was probably thinking about. As I said, I forgot exactly what I said, but I remember, Bjorn, now that you were asking about this indeed. So that's funny. Ah, yeah, I remember. I was talking about these lines here. I was talking about massive divergence. No, not divergence. Excuse me. Not divergence. That's why I wouldn't trust the upside. The downside scalp, excuse me. Now I remember. Yeah. Yeah. Well, we did get a move down to the green band. That's funny. You're right about that. Normally, we get that when we have divergence. That's the target, but good job there. So, how about maybe some supply-demand thingies? We didn't find them, or I wasn't maybe looking enough for them. That could be the potential too. By the way, regarding that, Bjorn, it's funny, you can see how, in a way, depending on your trade management, in fact, the same chart could give actually two traders a profit or two traders a loss, really, if you think about it. It's quite funny. Let's see, supply demand, basically looking for a range. And on this dollar CAD I just chose by coincidence, we do see a supply demand zone. We have an impulse here, we have a range here, and an impulse, a very strong impulse after that. So if price were ever to hook back to that level, this entire 105.80, 107.20 zone is a support level. So that's a good example. Doesn't have anything on the hourly because price is retracing too much. maybe on this pound yen daily, there's a zone right in here after impulse. Of course, the bigger the zone, the better. This is quite small, right? If it's small like that, it's not that strong. The wider it is, the stronger it is, especially if there's a strong impulse as well. The smaller, the less important it is for the market. Now these all are not, supply and demand zones. These are all tops and bottoms, in fact, right? So when you see that, it isn't the supply and demand zone. Maybe here there was one after this impulse, but there was a very weak impulse after that. Still, the hook back did prove to work. But otherwise, these are all tops and bottoms, so they don't count. Now I'm going a bit too fast through the charts to see, it has to go a bit slower. Here there's one, impulse, range, impulse, but price never hooked back to it, and when it did, it broke through it, so they don't, of course, always work. That's why you need the 3-to-1. Maybe here it is one, an impulse, range, impulse, and price hooked back to it and bounced off it, right? But they're not that, maybe I'm not, that keen on them, not looking hard enough, but they're not that many. Maybe on the 50-minute chart we'll see them more. Let's take a look. I don't know. I don't see them today. I don't see them that much today somehow. Maybe I should take a look at a different pair. Let me think. Maybe Aussie. Let me take a look at the Aussie. Well, this in a way was a supply-demand zone, right? On the 50-minute chart, we have an example of the Aussie. We have an upside, triangle / supply-demand, upside, and a hook back, right? Provided, oh, 1 second, one more time, up, supply-demand, up, the hook back, support. And if you use the principle of putting the stop loss below the supply-demand zone bottom, the stop loss would be at 89.89. The entry could have been at, let's say, halfway this zone. So that's about, let's say, 90.02. So the trade would have been taken in. Price would have gone 4 pips below. The TP would have been this top at 90.38. So that's 36 pips. Stop 36 pips, and the risk was 13. So that's 26.10. That's about 2.8 reward to risk trade by entering halfway the zone, putting the stop loss at the bottom, and targeting the top here. Now, of course, if you have reason to go for higher, fine, you may be still in the trade, but you do see, though, that after the top has been taken out, you do get a very deep retracement before you get that upside. So that was a good example, I guess. Maybe now would be the right moment for any questions you have. Of course, anytime you can ask a question, but now specifically, maybe any questions about today, charts, supply, demand, other concepts, let me know. If I don't see questions, I guess, in the next 5 minutes, we'll wrap it up for today. And we'll be back tomorrow, of course, on the 13th, on Thursday. And we'll have a different topic tomorrow. Tonight there is also Tarantula speaking about price action system, I think, is a topic today. Let's take just a random pair and see if we can do some analysis in the next 5 minutes together as I maybe wait for some questions that you have. Let's take a look at something that I don't look at usually or all too often. New Zealand Swissy. Let's take a look at that one. Raymond is asking the stop loss. The stop loss, if you have a zone, you would have to mark down on your chart what the bottom is of the zone and the top, right? Basically, well, not even the top is necessary, but the bottom is in the upside. I'm talking about an upside example, mind you, with the up impulse, range, and the up continuation. The opposite is true for a downside example. In an upside example, you would put the stop loss below the bottom of that range by a couple of pips. And the entry would be anywhere within this red zone, although you want to make sure that the R2R is about 3-to-1. In this case, we would have an R2R around the entry around 90.02. So the entry would have been here. Stop loss would have been below the red line, right? And the target is the previous top before moving back to the zone, which is that blue line right in here. So there you have it. The green line is the entry there, about halfway. In this case, where there's an approximate 3-to-1 R2R. Stop loss below the zone in this upside example. And the previous top before making the down move to the supply demand zone will be the target. Of course, that's a conservative target. If you want to go for a more aggressive target, it's possible. You can aim for higher. If you expect more upside continuation, if you expect the trend to last longer, or you can do 50-50, for instance. But this is the conservative target. So I hope that makes sense. If you have more questions, or if you want me to repeat it, let me know. This is the upside example. Björn is saying if euro will pound go a bit weak too. If euro will go pound will go weak as well. Yeah, they will definitely follow each other roughly, of course. There's also the euro pound, obviously, right, as you know, that influences it. But at the moment, the euro pound seems to be turning a bit, right? We have a lower high here, we have a lower low here, and prices beneath the moving averages, and the black band is pointed down. On this hourly, there seems to be some resistance here kicking in. So the euro and pound will mostly follow each other, but the one could be stronger in its movement than the other indeed. Yesterday both had an upside, intraday upside day, but it was quite choppy. So I guess it depends. If the euro and pound both move up, then the pound could move more up because the euro pound looks a bit bearish at the moment. If the euro and dollar go down, then the euro dollar could maybe move down more because, as I said, the euro pound looks a bit bearish at the moment. So we'll have to wait and see indeed. But most likely they'll move approximately the same directional guidance. But the question is how much indeed. New Zealand Swissy was probably not the best example. Also here, pretty choppy resistance level right here. big range, in fact, on the weekly, the daily, also within this range, a very strong range as well. Look at that. Resistance here, support here, and prices bouncing from top to bottom. This is a good scenario, though, for the range traders, right, that have these levels in mind. And well, not that interesting in my opinion. We're breaking consolidation. There could be a breakout trade up to the tops here, maybe. But then I would need to see a pullback and continue and bounce to that upside. Not that interesting though, otherwise. Well, folks, unless you're hunting for the other idea, of course, that's the lower time frame idea, right? Look for a hook back to the resistance. If you're trading a range on a higher time frame, then an interesting thing could be to look for some resistance or rejection off of the resistance here for a move back down to the bottom of that range. That would be the other side, of course. Last look at the odd New Zealand, what's happening here. Odd New Zealand didn't break the magenta line as yet with a good close of the hourly. The hourly is a doji and no close underneath that level. So the break turning into a bit of a false break here, and probably better to wait for those who haven't entered yet in that reversal trade. Probably wait for a break, pull back, and continue. So the continue would be the better one here. If you're in that trade, you might even think about maybe even exiting for just a few pips loss, because we're back in the uptrend channel. The break didn't go anywhere. So as you can see, sometimes with these reversals, it's better to wait for a break, pull back, continue. In fact, okay, that's good, Bob. Happy to hear that. I'm glad it didn't wick you in there. Good to hear that. Let's see. Raymond is asking, how significant will be today's data of UK Bank of England governor speaking and the inflation report? I think pretty significant. We'll definitely see movements. We'll see volatility connected to that. We'll see ups and downs, spikes, etc. The usual, show, I guess, in a way, if you like. That is pretty soon, right? So you have to be careful with that pound. The pound is now consolidating. It's waiting for a price or that news event, and then we'll see a reaction to that. Made kind of a classical heartbeat here, up, down, up, back to neutral. As you can see, waiting for that news event. So that will definitely shape the market. Let's take a look when that is exactly. So now we're at 25 minutes from now. An hour from now we have Euro industrial production, by the way. Well, folks, thank you so much for being here. Now we'll wrap it up for today. Great to have you here, and thank you all for your comments as well, by the way. Always appreciate them, and anytime you have questions, by all means, let me know. As I said, tonight Toronto will be here at 6 p.m. Central European Time, 5 p.m. GMT time, and tomorrow, same time, same place, 7:45 GMT. Have a great day and good trading. Cheers.
The organized